Why are uranium stocks crashing? You have the North Shore Mining ETF down 14.21% in the last 5 days. Well, here's a clip from an interview with John Polomny, which has not yet been released, but I wanted to get it out so you're aware of what is kind of happening and what the risks are to this uranium rally.
I think another big risk probably could be is, just a general market decline. Uranium stocks are stocks, and in a general market decline, most stocks go down. So I think longer term, you'd still be okay, but it's very hot money right now. So I think if you got a general market decline, everything would probably go down a certain amount, and then, but just be another buying opportunity because the fundamentals wouldn't have changed in the uranium market. People should really go back because a lot of the companies still that were in the last bull market are still in existing juniors, and look at the charts of some of these stocks, because from 2004 to 2007 or 8, when the thing went from 18 to 135 or whatever it was a pound, you could see a lot of these stocks. I mean, I used Forsyth as one of examples in one of the videos I made. It had 4 or 5 50% drawdowns on its way from like 25 cents to $12. And so what did people do during that? Did they sell on that drawdown? Did they buy more? Did they look at the fundamentals and say, this is just how it is? This is a very volatile market and the fundamentals haven't finished playing out. I mean, people are going to try to trade around it. I'm not a trader. I mean, some people will trade it. But people need to be ready that this is going to be very volatile, and, you're going to be 25, 30, 40% moves down are not going to be uncommon on the way to wherever this thing ends up.
So he's referring to a correction in the broader market, which is exactly what we're seeing. If you look at the stock market, down about 3% today overall. And if you just look at the chart, you could see that it was ripe for a correction at some point, right? It just straight up, you could have kind of maybe put 2 and 2 together and said, well, okay, so the stock market's up, straight line. It's probably not going to go up like this forever. There's going to be a crash. If uranium's running right into that, then it could be a headwind. And this aligns with kind of what Steve Penny was saying, in that, regards to uranium, you want to be buying it on dips. Eventually there will be dips. Here's a clip from him last week.
I think the Sprott Physical Uranium Trust has accelerated this bull market, and it's probably shortened the duration. I think it's going to happen faster, very likely. So we are due for a pullback here. And I think that's probably going to happen pretty soon. I mean, saying it's going to happen tomorrow, that might be a little bit, I'm not going to stick my neck out that far, but we're due for a pullback. I think the next sharp pullback will probably be the last time to get in at really good entry points. Once it goes up to 60, 70 and pulls back to 50, I mean, I think you could still make money off of that, but it's just not going to be the contrarian trade that it is, right now.
So I think the bottom line is that you can listen to the experts that we've had on saying, nothing has changed about this rally. It seems like technical corrections is what's happening. Steve Penny thinks it's a buying opportunity. We'll see if he's right. But as far as why uranium skyrocketed, nothing's changed. But the broader market sell-off. And I guess the real question is, does the broader market sell-off have legs? Is it here to stay? Will it crash? Because let's say there's a 2008 financial crisis that happens. Well, uranium is going to crash with it. The question is, how severe will the broader market correct? And what I want to point to, and one reason I'm skeptical that this is going to be a financial collapse, look at this tweet that Holger Japitz put out on September 17th. Okay, so recently. Investor sentiment has nosedived this week. The bull to bear ratio went from 1.43 bulls to every 1 bear to 0.57 bulls to every 1 bear. So going into this nasty correction, we have very, very, very bearish sentiment. Normally, you have to fade the sentiment when it's all skewed in one direction. So that's kind of what I was doing the last few weeks, right? I put on this hedge long VIX, which is the fear index, because sentiment was skewed bullish, right? So you always want to kind of bet against the crowd if it's completely at extremes. And I guarantee you today, the bearish sentiment is at complete extreme. So let's say this bear market continues for a few more days, it's going to get even worse. and you're going to probably want to fade that, which is what I'm going to do. So I put on this hedge by buying a position in the UVXY ETF, and it's up 30 something percent today. I'm going to take that off the table because I just can't be into a crowded bearish trade. I just, that's not how you make money, right? So again, sentiment's really bad. Nothing's changing in terms of the Federal Reserve providing liquidity to this market. I don't think the bubble is over yet. Again, because if you look at like the Japanese chart, they've already done this experiment, this money printing experiment. It's already happened. And we can kind of see how it all works out. So the Japanese were the first to try this epic money printing experiment. And look what happened to their stock market as they were doing it. It just absolutely melted up. And there it is. That's the chart. And obviously you had lost decades of returns in stocks, which I'm expecting to happen in the US stocks as well. But you can just see here, what is this? In 1987, the Japanese stock market corrected. It didn't go up in a straight line, even though they were printing money, but it rebounded. And I think we're probably seeing something like this. I don't think the air is completely out of this, especially with bearish sentiment where it is. We could be in for another big run up before a collapse, which is kind of where I'm positioning. I'm taking off my bearish hedge. Obviously, it could go a lot further, but I'd rather accumulate cheap assets here. But, stay tuned. We have more experts coming out. The John Polomny interview is going to come out. He knows this market like absolutely no one else in terms of the supply-demand fundamentals behind uranium, what's actually happening. He nailed it. He'll give us his time frame for how long he thinks the bull run will last. And given that time frame, when you see gaps like this down, it's generally a buying opportunity. You do not want to chase it at the top. You never want to chase anything at the top. We'll see. It'll probably go down further. This is a work in progress. We'll see how it turns out. This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.